Okay, Dean Kim is with us now to take some questions on how he's looking at things. He's head of global research product at William O'Neill. Dean, good to have you with us here. There is strength in US. Will that mean strength for other markets, for markets like India? Your sense?
Yeah, I mean, we raised the market status to uptrend following a powerful rally in both S&P and NASDAQ today in the US. Both indices cleared resistance at the 200-day moving average, and the next level of resistance is at the 50. So very welcoming, action today. And coincidentally, a lot of the stocks, particularly the mega cap stocks and tech stocks, some of them, they're reporting really well. So that's good to see. The breadth of the market was heavily damaged, with only 18% of New York Stock Exchange stocks trading above their 150-day moving averages two weeks ago. But we're now starting to make some improvements today, with 21% now above it. So things are looking good for now. I think the trajectory of Fed rates, they're probably going to be on hold. There is a possibility of one more rate hike in December, but given the fact that the bond yields have been testing 5% just recently, it's doing its job. And when we look at mortgages in the U.S., it's 8%. So financial conditions are very tight, and I think Fed, if they were to stay course and not raise rates, that would be understandable.
Dean, hi, good morning, and thanks for joining in. On the Nifty, what is your chart looking like now? I mean, we've seen a recovery of almost 300 points from the lows that we hit in October. Is there still more to go on the upside? And if yes, what would the targets look like by the end of the year?
Yeah, I think, the Indian market has a little bit of work to do. We saw a bounce off the 200-day moving average. And now the resistance is at around the 10-day moving average, followed by 21-day. And so, the way I see things is basically China is still in downtrend. So there should be continued interest in India. I think the pull down from India in terms of index was caused by the weak U.S. market. And now that the U.S. is recovering, there should be some interest in, emerging markets, particularly India. So I am looking for India to sort of reclaim the short-term moving averages and make its way back up again.
All right. Hi, Dean. Good morning. The last time you joined in, you were telling us about a few stocks, EIH, Sarah, I think. You'd also spoken about Varun Beverages. So from the Indian markets, what are you looking at? Are you looking at more the large caps? Last time around, you mentioned quite a few of these mid-cap names that are very well-run companies. Your view?
Yeah. Actually, in my screening, I'm noticing a lot of sort of mid-cap names continuing to pop up, particularly in the financial sector. So, for example, like consumer finance companies, whether it be credit access, even IndusInd Bank, that's setting up, that's a large cap, like L&T Finance, and Equitas Small Finance, Central Depository Services. These are sort of the smaller cap, mid-cap names in financial sector that appears to be doing really well. The larger cap financial names, particularly private banks, they still have a ways to go. But I would continue to focus on perhaps state banks like Punjab National Bank. That one looks really good. And like I said, IndusInd Bank, that's setting up right now.
Okay, all right. So those are a couple of banks. What about some of the IT names? How are you looking at them? Post numbers, it's been a sort of a mixed bag, but a lot of the IT companies have come back from their lows. Any thoughts?
Yeah, actually the smaller cap, mid cap tech names look pretty good at the moment. Dixon Technologies continue to look pretty good. Persistent Systems, Sonata Software. I would focus on those names as they're sort of breaking out from early stage base. Yeah, they look particularly good. Unfortunately, Tata and Tata Consultancy as well as Infosys still have a ways to go. they won't really, outperform until U.S. sort of stabilizes and get their footing.
Okay, Dean, good to have you with us here. Thank you very much. So you're expecting a bit of a trending market, at least in the US, and good to get your views here in India as well. We'll